that if you're very good at one thing and you know that thing better than almost anyone else, then diversification actually reduces your return on investment. And you rather just go full into that one thing because your level of risk isn't rising, but your level of return is. For example, I don't think that a big buyer's agent will bring you that value because you swear they've migrated it so hard to come start a life from scratch. They know most of them have come with hundreds of dollars or less than $10,000 at least. Every dollar has value.
Is because you're starting from scratch, you've come outside of your comfort zone, and that's what is leading people to buy more and more and save more and more. I see households earning 180 to 220, but they're saving a good $6,000, $7,000.
I remember back in the day when we were little, we used to go to India and our parents would like buy electronics and clothes. And it was real Nike, real Adidas, not fake stuff, but it was like half price. Now it's more expensive than Australia, more expensive than the US. So anyway, go figure.
Like hundreds of rupees and you can get original Nikes and stuff. But now, game has changed. But yeah, Ashish, you can jump on the next question. This answer, where else would you get PK answering your questions about if you can buy property in here and just move back to India? Nowhere else. Thank you, PK, for doing this.
Yes,
Ashish.
and I think there's always some learning to do, especially with what you're saying and the level you are.
Hello, everyone. My name is Rahul, and with me, I have Ashish as always. And with us today, we have a really special guest session we are conducting on Ask Me Anything About Investments and Real Estate. With us, we have one of those industry's OGs and GOATs, and he is an OG and a GOAT at the age of just 35. What makes him an OG? Because he has a property education course, and he has a community of over 65,000 people where this presentation and makes content on YouTube, Facebook, Instagram, and all different platforms that we use. Not only that, Ashish has done a course himself when he started, and he teaches people how to buy a property without having to pay people like Ashish to do what he does. Ashish does it well, but there are a lot of people who don't do it well, and I'm sure at some stage we will cover that off. How are you?
I'm doing well. Thanks for having me on. I'm very grateful, Rahul, and you, Ashish, as well. It's very nice to get to know you, Rahul, and of course, Ashish. We already know each other, so good to connect again.
Yes.
Perfect, PK. So before we jump into the question, sorry, Ashish, I'll just have this one question which I may not have done, and I'm sorry, PK, if I put you on the spot, because we covered that you are like doing this course, and people use bias agents, and some people you are educate in the education sector. So what makes you do what you do? Why do you do this? If you want to answer that, maybe briefly.
Yeah, it wasn't something that I planned on doing, because I am a property investor. I built a methodology for myself by myself, and then around 2015, I just, some family and stuff started asking for help, and I was helping them. And I mean, I didn't charge them or anything. And they were like, oh, this data system seems to be working. I was evolving it, getting it better. And then a couple of years later, sort of friends of friends or friends of family that I helped, they referred me, and I was like, well, can't just be doing it for free. Like all these people could at least charge something nominally. Back then it was like one-on-one Zoom sessions. I didn't have anything like formalized. And they started getting results. So, and then I was like, oh, there's something in here. Like I didn't go out there to start a business. I was still working, I was in the strategy
If
professional.
you're good at something, never do it for free.
Right. Well,
Well,
yeah,
I, I
if
think
you do it
more
too
than
much for free, I don't think people like value it. But
value it.
my family did value it back in the day, but it depends how well you know them, I guess.
And I think PK, I really like from how you've grown from a humble background to having a very healthy portfolio and doing well for yourself, the family, but at the same time adding value to thousands others. And even though I've not been an active member, but off and on, you know how when someone's influencing, all their updates are always shown to you. I've always been seeing concerns around people selling your courses further. So not just making money through property, but also making money through selling your courses further and then giving the courses to others or trying to get access to course. But I think I've seen the value that that course has generated to so many people that they've built businesses around it. So kudos to you, and the humble background, and still, choosing to come to talk to people, just not in the same position. But again, very thank you so much for being here today with us.
So the questions that members have asked, we will ask those to you, and you can answer those and let us know your thoughts on that. So one of the really good questions, the first one is, what is the best advice you can give to first-home buyers or new investors?
The best advice I can give to first home buyers or new investors is that although it may seem that the property market in Australia is expensive, and it is, actually, you can still afford something. And it's just a case of buying something you can afford. If you look around, even in a place like Melbourne, you can buy stuff for under $500,000, under $600,000, under $700,000. And I'm not just meaning like an apartment in the middle of the city, on some 50th floor or something. You can still buy it, but it's just a case of not wanting to buy your dream home as your first home. And same as an investor, you have to be patient. Even like with some of my clients or even non-clients, they say, "Oh, PK, and I've got like 4 properties. I bought them in 6 months and now I'm tapped out of my borrowing capacity," and they're super like sad. And I'm like, 4 properties, 6 months. I mean, I didn't get 4 properties until like 4 years into my journey, right? So it's all about context and patience and enthusiasm. Buy where you can afford, follow data, whether you're a first home buyer or an investor, and just be patient. Let that thing mature as your career progresses. Your income will increase. Maybe you can look at alternative ownership structures so that your borrowing capacity doesn't max out. But my biggest piece of advice is the housing market is not too expensive for you to start.
And that's a very, very good piece of advice, PK. And I think I sometimes tell people it's not a race. Even if you get one a year, you still should go at a good pace. And then a lot of investors come to me and ask, or we've been advised to create a trust without realizing that actually trust can come a bit later because they can claim all the benefits from the 80 over period of time as well, especially
No
first two,
financial advice,
three, right?
yeah,
Yeah,
no financial advice, but
no financial advice.
not our
Anyway,
place
so
to tell. Yeah, but yeah, that's good advice. Just whatever first home, it's a proper ladder. So once you get onto that, this is just the first rung of that, and you can just climb up to the eventual family home or your forever home later down the line. And there is always going to be something wrong with the property in the price point that you're looking at right now. But down the line, you can just progress and go toward that ideal place to have in mind. Good. This is Ashish. Do you have the
yeah, so
second question?
PK, we've grown as consultants, educators, professionals, but again, and a good consultant will always remember how they've grown. So, question to you, if you had to start over again, knowing all that you do, how would you start and where would you start from?
Do you mean start my property portfolio?
Yes.
Yes, the property
Yeah.
journey that if you were a first time investor or first home buyer,
Yeah.
what would you do in today's times, knowing all?
Good question. I think so. My first property was in East Gosford. It was in 2011. I had like maybe 50, $60,000 saved up, and I bought that there because it was affordable. It was like 300 and something thousand dollars. I think in hindsight, I probably should have bought in Sydney, or maybe like, St. Mary's or Penrith or something. But at that time, those locations, even Liverpool or, I mean, Kellyville and these types of places didn't really even exist back then. But especially Penrith and Blacktown, they had a huge stigma as being full of crime, full of roughness, and the demographics were said to be not very pleasant. So I think I let that influence me. I mean, East Gosford, in hindsight, it did very well, both in the short term and the long term. But I think if I had bought in these Western Sydney suburbs back then, remember back then they were under $500,000 and they were almost positive cash flow, I think, from memory. and you could build a granny flat. I mean, it was at a really good sweet spot back then. I probably would have done a little bit better. And so the lesson for myself and maybe others is don't let the current level of crime, don't let the current level of social demographic status influence your 20, 30-year investment decision because oftentimes those locations are the ones that have the most gentrification upside potential, which is to say they tidy up and they then become really premium suburbs, or even if not super premium, at least much, much, much more expensive as, the incomes rise. So I think, was it a huge mistake? Probably not, but had I started again, I'd probably get at least one or two in Sydney. But I don't want people watching or listening to me now and thinking, okay, well, that means I need to start in Sydney because if you start in Sydney right now, your yield will be like 3% and you'll be like 30 to $70,000 negative geared.
You may
Probably not
not
a
be
good
able to
idea.
afford that to begin with. So
Yeah,
yeah, the
that's
bottom line
such
is
good
not
advice.
that buy in black town, but that keep in mind gentrification can happen, and don't let that deter from you buying into a location where you can afford, and just because it does have a little bit of a bad rap as of now, but things
Yeah,
always
I
change.
think this is what I've seen as well, and what I always talk is the growth has no relevance to how rough the suburb is. Because even the most prominent buyers agents have been advertising that they've been buying left, right, and center in Gosnells or in Perth or in Goodna in Queensland, or there's one that was saying Elizabeths of South Australia. But these areas actually give better growth just because, as you've said, they have better chance of gentrifying and your entry point is cheaper. And apparently you're getting big lots as well. But yes, you're right. There's a lot of confirmation bias out there. So keeping that neutral mindset is very difficult at times. So thank you so much for those words of wisdom.
So one of the things that you mentioned was about the crime rate. So what would you say are the other high risk parameters while buying an investment property? Like crime rate as is one of them, but what could other high risk parameters be?
So I think just to clarify, crime rate is not necessarily a high risk parameter when it comes to correlation with capital growth, but it is something to be conscious of insofar as the ability to get the right tenant. Because I mean, let's look at in Queensland, let's look at a place like Woodridge. It has a pretty high crime rate and it's gone up a lot. I haven't invested there for different reasons, which I might come to. Yet people have made a lot of money. I think that properties have doubled or maybe even tripled in recent years. But there's also so many landlords there where they've got a crime-laden house. Maybe they're taking drugs or they're not following the rules, etc. So it comes down to it's okay to buy there, but then be extra strict with which tenants you take on. All right, you have maybe accept a little bit of a longer vacancy so that you can be stricter with the caliber of tenants that you take on. There's always going to be people who are law-abiding citizens, so to speak. Probably that's not the right terminology, but are pleasant to work with in even a rough suburb. So we have to wait until we get those types of people. But in terms of your original question, what are some high-risk parameters? I mean, a very similar one, and Ashish might have more to contribute to this, is social housing or housing commission. I'm completely fine to buy a house if there's one or two housing commission type properties on the same street. Sometimes housing commission folks are completely like they're not rough at all. They go against the stigma that often people have. But I wouldn't buy a property if there was huge clusters of housing commission in that sort of neighborhood or that block or a couple of blocks around them. Because when you get a lot of them, then there's a higher risk of unsightly behavior, unkept lawns, etc., etc., hooliganism. Once again, I don't want to like pigeonhole people who live in housing commission into a box because I know that they're not all like this. But as property investors, we're running a business of property investment and we want to lower our risk. So maybe crime is not the right one, but similar to crime, I'd say housing commission. And then that does sometimes impact your ability to get a high valuation from a valuer and then resell the property if other people drive by and it's like, weeds up to here on your next door neighbors and stuff like that.
Yeah, I had a property like in Albury and really good location. Bought it like last year. Um, a little bit close to the housing commission. It did go up in 1 year, whatever it did, like really well. But then the problem, as you mentioned, in getting the right quality of tenants because it is surrounded. When I call the other property managers, other real estate agents in the location, they tell me that yeah, they are not going to touch that lane with a 10-foot pole because of like there's always a cop right outside that. So a lot of tenants of good quality tenants would not want to live in that location. So personally, like some of these locations do seem really well, but the pockets within that can have clusters of, as you mentioned, housing commission or low socioeconomic areas can deter good tenants to get into that. And also when we look at locations like maybe like one of the prime locations that a lot of people are buying in is Shepparton, and we hear similar things about that. A lot of community housing in that. But yeah, maybe Ashish can talk more about that better than I can.
No, I think I fully concur, PK, with your points. But yeah, just so the housing commission part, I've seen sometimes there's no housing commission in that street, but the pocket, and I think they identify the pockets through SA1 and SA2, sorry, SA2 and SA3, which is your statistical area twos and threes. And sometimes the pocket is pretty big, even though it says 15%, and 100 houses, we're talking 15 houses of housing commission. I just ensure the houses are not immediately next at the back and in the front. Um, to the tenants part, yes, that's a negative avenue of buying in a rough pocket or not so good pocket. I love when the demographics are restricted in such a way that they cannot move to the nearby suburbs, either because there's certain communities living there or there's certain types of people living there, and that's when they're restricted in a certain suburb, and the next best suburb could be 5 or 10 kilometers out. And I feel those are the pockets that you sometimes work through. And I live in Castle Hill, so just cross the road and you enter in Kellyville. And I feel still that Kellyville is the most reasonable pocket out here. But then that's what I call it, undervalued for the right reasons sometimes. But anyways, PK, coming back to our next question, which is towards building and face report.
Right.
And
So I
yes,
just wanted to go back to the previous point. Are there any other high risk parameters, flood zones, or any of these things that can also be considered high risk, just for my knowledge, bushfire zones, flood zones, or any other factors that we can cover in that maybe? Would you consider those as
Yeah,
high risk
sure. I mean,
parameters?
there's tons of them, right? There's like there's like 20,
Thank
30, 40 of them. You're right. Flood zones, bushfire zones, maybe ones that people may not intuitively know about, like flight paths. Sometimes I know that, my parents' house in Brisbane, it wasn't on a flight path, but now it is because Brisbane built an extra runway and the way that pilots land and take off has changed. There's also things like zoning. Sometimes you might think you're buying in a nice, quiet zone, maybe medium or maybe low density residential, to use a sort of Queensland terminology. But actually, uh, they've sort of earmarked that area to be rezoned into higher density, in which case you may be screwed, or maybe that's what you want because you bought that house for the ability to, in the future, subdivide or split or something like that. So, there are all these things that you have to consider, but I think they're not really rocket science. I think people are really hesitant to get on the phone and call the council and just ask questions. I think a lot of people, they just need. One thing have started saying is property investment is a lot around picking up the phone and making phone calls. Don't be shy. You can just call the town planner and the local council and ask, what else do I need to be aware of? And by that process of doing such, you'll also learn what else there is to be conscious about. So yeah, that's kind of a tip that, I mean, I can go through 30, 40 different things, but I'd rather teach
That
how to
gives us
learn than
enough.
just give
Yeah, I
the
think that
answers.
gives us enough. But thank you for covering all these topics. These are really informational. Yes, Ashish, sorry.
awesome. Works well. PK, coming to building and face reports, and I've seen a lot of deals fall through. And even in the way the reports are built, it just scares people off. So, how would you make sure 100 100% compliance on the building and pest report?
These days, the way I interpret building and pest reports, Ashish, is a little bit different to how I used to maybe 10, 15 years ago. Before, I used to completely rely on just reading the report and just make a decision. You know, if there's any structural things, I immediately give it a cross and exit the contract. And if there's a lot of non-structural things, maybe it's 50-50 and there's just a few non-structural major defects, then it's fine. But these days I have a more nuanced approach. As you know, I read the report, and oftentimes it's littered with things that make it look like a really, like, like a horror story. And that's just the building and pest report covering its own bum, so to speak. From a legal perspective, I get on the phone, talk to the building and pest inspector, okay, and get a real understanding of what did you mean by that? What did you mean by that? Is it really as bad as you thought, or you didn't really emphasize this much? Could that get worse in the future? And this allows me to create a sort of 5-year timeline of potential maintenance to do in the property. If there's anything that is just going to cost me 10, 20, $30,000, I most times just cancel the contract, exit the contract. But one thing that I've started doing these days more and more is asking more about the condition of the drainage, the plumbing system around the house, and also the roof. Sometimes I find, actually most times, building and pest inspector doesn't actually go onto the roof. I think you know this, Ashish, and nor do they go into the crawl space. And they often mention that because, they can't fit or whatever. And so then, especially if it's a house, well, any house really, but especially if it's more than 10, 20 years old, I then arrange for a separate roofer to go and inspect the roof. Because, even if the nails are rusted on the roof, maybe they're 5 years old, 10 years old, to get all those nails redone is like $10,000 for a sort of standard 4-bedroom type low set house. Repointing the gutters, all this stuff is, if it's left untended, it can really cause, let's call it 50 to $100,000 of pain. Recently, I know someone who sold their house in Brisbane, and because of the recent cyclone, their whole roof needed to be redone. They hadn't really maintained the roof that well, and property manager doesn't really look at the roof either. And instead of getting a new roof because it's like a $500,000 house, $100,000, 20%, not really worth it. They wanted to sell the property, so they went through a sales agent. That sales agent knew a buyer's agent. That buyer's agent got that property under contract for his client. They did get a building and pest inspector, of course, through. The building and pest inspector said, yeah, this is going to cost like maybe 20, $30,000 to fix. The seller knew that the building investment sector didn't know what they were talking about. This is in the northern suburbs of Brisbane. And he was like, oh my God, they didn't pick up on this. They brought down the contract price by $30,000. The buyer was happy, the seller was happy, the buyer's agent was happy, the seller's agent was happy. This just happened a couple of months ago. Let's wait for the rainy season. They're going to have mold all over every single roof, every single room of their house. And it's going to be a disaster. And this poor buyer is going to realize that the whole roof needs to be redone. And it's not a good outcome. So from that as well, I've learned, don't just rely on the building and pest inspector, especially if they mention anything roof related in the building and pest inspection report. Get a roofer up there to give you a second opinion.
Good.
That's
Yeah.
again a very awesome point. Now, we've had some issues, similar issues, and that's where I think sometimes those extra plumbing inspections and roofing inspections help. We've also started doing compliance inspections from day one in Victoria, for example. And fortunately, we didn't have to learn the hard way. There was an extra expense of $4,700 that came for one client, which out of respect, I pitched in 50% of it. But one learning was that get the compliance inspections done. So and again, you never have to always face the issues based on your experience. You can learn from others' experience as well. And I think these conversations definitely help. So thank you so much.
Yeah,
Yeah.
I mean, this is
So
why I'm sharing it because this was a revelation to me. that I'm pretty sure the buyer's agent wasn't malicious. He just relied on the building and pest inspector. So you could say it's a building and pest inspector's fault, but you can't really blame them in hindsight because of all the disclaimers and stuff they have in the report. So it's
Spot
the
on.
buyer who's left with, holding this. So that's why I'm just trying to educate the buyer.
So one thing also what we do is, PK, we ask the building and pest inspector, what sort of building experience have you got in the past? Do you own a builder's license? Because a lot of contracts mention that your building and pest inspector needs to have a building license. And the last thing that we check is, are you able to give us estimates on repairs so we can line up everything and go back and take um, estimates, quotes from others, and or from the building and pest inspector. And to your point, I've got a roofer in my, so how there are business networking groups. So in my group, there's a roofer who I always run past certain things through him. I think it's pays to have a good network of people as well. But yeah, you never know what misses your, even though you,
And
you
like
have that
as
attention
a
to detail.
buyer, as like individuals who don't come from the same background, who don't speak the same languages as a professional, we don't understand what exactly it means in the build and pest report when we read it. So if the build and pest inspector is not like properly, and we don't even know what to ask. I think it comes down to the onus on the buyer's agent, because we are paying someone to, let's say if we are going through a buyer's agent, that they can ask them these questions and figure out what's wrong with the property and explain to us. And if they are not doing the due diligence, some of them do, some of them like good ones do, but a lot of them don't, which also becomes a pain point because you have to pay from your pocket, as you mentioned, 50, 60,000 down the line on something that got missed in the initial due diligence, even it was written there, like in black and white, it was written there. So it does come down to someone who, and if no one is looking at that, it comes down to you. So
Yeah, I
fair
mean,
point
this
that
was I wasn't trying to be anti-buyer's agency. I'll give you another anecdote here in the house that I'm sitting at right now. I was getting like a proactive roof inspection done before the winter comes, and because it rains a lot here. And I had three different roofing companies come in, and some said that your ridge caps have got a slight crack, they'll need to be replaced. Another roofing company said your roof caps have got a slight crack, but they're called prestige. You've got prestige tiling, so you've got multiple layers, so it doesn't matter. Okay, so that was a difference of like $15,000. And the other one said, I didn't see any cracks in the ridge caps at all. So then I'm like, I got these three people in, these three different opinions. And it's up to me to ask the hard questions. And I said, look, I've got this other guy, and I showed him pictures. Here are the cracks. What did you think about it? He's like, you know what? Let me go and take a second look. So whether it's the buyer's agent or you do it yourself, the point is that it's your accountability, it's your responsibility. You have to be happy with it. You can't just trust someone else, professional or not, to care about your asset as much as you do.
agree, 100% agree. So like you have like so many good advices, and you have been doing it for so long. The next question is on the same lines, that given that you advise so many people, do you ever get any imposter syndrome? That's a really interesting question that we have.
Oh yeah, massively. I think I still have imposter syndrome. Um, even like posting a simple free video on YouTube, let's say, I know like about 18 months ago or a year ago, I posted, um, I've been very negative on Melbourne for like the longest time, kind of against the grain, and I got a lot of hate for that. But it was vindicated because Melbourne is really underperformed. I remember in 2020, 21, 22, people were like, oh, this guy just hates everyone who lives in Western Melbourne. That's why he thinks Western Melbourne's not going to grow. And it didn't really grow. And that was just based on um, a data analysis outcome. But then 18 months ago, a year ago, I did some videos on how Melbourne's actually going to turn around now. And I remember sort of thinking to myself, people, even who haven't done the course, are going to be buying in Melbourne because I'm sharing content on it, saying positive things about it. Like, I hope I'm right. You know what I mean? It's like, I better be right. Otherwise, all these people, I mean, I have no liability because they're just watching my free content, but a lot of these people are making like putting their life savings into this, making $500,000 decisions. So I always have this imposter syndrome. I'm always grateful when I get things right, and I like to think I'm relatively humble when I get things wrong as well. And then from that, what can I learn? What can I improve? Coming back to Woodridge, where I mentioned before, I didn't pick that suburb to do as well as it has, and I've shared the reasons on why I didn't in different episodes and what we learned from that, like COVID bottlenecks, builders going bust, construction prices going up, so new houses didn't get built that were ought to be built. So I think, yeah, it's funny. Like if you say you're humble, that's a telltale sign of being not humble. So it's kind of, but I think
Like you're
humility and
self-aware,
humble
you're
become one and the
self-aware.
same.
Yeah. So on the same note, as you mentioned, something you were saying about Woodridge is fine. You also said something about what was that point? Having doubts and having that imposter syndrome. That's a sign of someone who's intelligent and self-aware. That can I go wrong? Because there's a famous quote or something that goes on the lines of it's ignorance and intelligent people are always self-doubting. So that comes from the place of like knowledge and self-awareness, I believe. That if you know that you could also go wrong, you are not like nobody's like knows it all, and nobody has a crystal ball that they can just tell you that exactly this place is going to do well, this place is not going to do well. And as long as you are more right than wrong, I mean, that's what I believe can help you get further in life.
Yeah, yeah, and just one thing to add to that, I think it's one thing to be making a decision for yourself, but when you're advising others, then it's like imposter syndrome on steroids because then it's like, it's huge responsibility. But yeah, I mean, I still face imposter syndrome across different facets of life, even outside of property. But I think it's a good thing. I think it helps you, like you said, introspect. It helps you. Um, gain courage. I don't think courage comes naturally to almost anyone. So I think uh, it's something you have to constantly work at. But it's really in life, if you look around the most successful people in life, I'm not talking monetarily, even like a single mom taking care of her two kids and just like fighting every day. She's courageous. The most successful people in life are the ones who have courage, who have confidence, and that confidence isn't natural, it's built.
Spot on.
Well said.
And it's good to question yourself because you'll always make sure you've done the things right. You'll always go back to the basics and start um, doubting yourself, but then you'll start to do the due diligence as well. Especially as you've mentioned, when it's someone else's money online and you do understand the risk and money is there, you just come in as a consultant. And I think you'll start to realize what information can you give to make sure no one's making a mistake. So again, well said. Now,
On
since
this,
we're talking of
on this topic, so sorry, just on the same topic, like as you mentioned that in today's climate, when there's so much hype involved, and that can also create the like wrong inflation in any suburb, in any location. For example, maybe I should not even name that location. Maybe it's fair value. I don't know. But maybe let's just put Darwin, for example. I get exactly like it may not do well in the long run for whatever reasons. Like I'm talking to other like professionals who are like deep into data. They also suggest that to me. But then again, when you look at like market trend and the prices, that says otherwise. Like the market right now is booming in that location. As you mentioned, Western Melbourne, I'm getting the same information from other sources that it doesn't stand, it doesn't have the legs to do that, but people are buying there, so that is also causing that rise in the hike in the prices. So yeah, I mean, I get that, like it looks like we are standing from reading whatever it says, that says one thing, but the market is driven by so many different factors, and it just looks like, wait, if this guy is saying no and others are doing yes, who is right? And you start doubting yourself, am I the idiot here? Do I know what I'm talking about? It doesn't seem right. So it can cause that, add to that imposter syndrome, I think. Yeah, just want
like
to put in.
there are big agencies now that pick a very small area and they focus in that area and they buy 30, 40 properties a month. So I have, again, it leads me to believe this the artificial demand that's getting created as well, but at the same time, a lot of investors jumping in too. That just scares me a bit. Now, PK, just while we're talking Melbourne, and I've been tracking Melbourne market since 2015. That's when I started investing actually, and you're talking to someone who's literally built a portfolio in the Melbourne boom, and I've come out a few properties as well. But there's a question, and Melbourne's hot topic. Um, is Melbourne a good spot to invest, say, $700,000? And if not, then it's city targets about 7 to 10% capital growth in next 1 to 2 years.
Yes, Melbourne is. And I'll just repeat what's already out there. Free content from myself. I did an episode or YouTube video about a more than a year ago, I think, something like that, on Broadmeadows. And at that time, Broadmeadows was pretty. I don't know. Did you watch that, Ashish? Did you see that video? It's
I,
okay if you
s-
didn't.
I saw those pockets, but um, the thing is, I also remember on that front, sorry, I'm just digressing a bit. You also mentioned that don't buy in Baldavis, which at that point I slightly did not agree, but I have bought there, and like everyone's got a very good return because I think at the end of the day, sometimes it boils down to the people who are staying there. But yes, I saw that, and I know it's a very specific demographic, what I like to call restricted demographic again. And I tell my clients there's no relevance of that because it's not a rough pocket at the end of the day. And there's no relevance of growth, and these areas sometimes grow really well. But yes, I see a glimpse of videos, and so many times now I just take a gist in 100 words so I can just quickly skim through it.
Yeah,
But
yeah.
yes, please, over
Well,
to
now
you.
you can use AI to kind of get a synopsis in in like a minute or something, right? But no, to answer your question, I think a lot of people are rushing like a moth into the flames into the Victorian and Melbourne property market right now. But there are some amazing areas, and the reason I brought that up, Broadmeadows, was it's gone up 10 to 20% in especially kind of the, you could say, scarce townhouse slash villa type of market. There are other areas as well, sub seven, $800,000 in Melbourne that have gone up. But I do not think, and I hopefully this doesn't come and bite me in the bum. I do not think that Melbourne is going to boom like it did in 2015. 2015, 2016, Melbourne was really good. I mean, Melbourne generally doesn't have these highs and lows like Sydney does. Sydney is the most volatile property market in Australia. Yes, even more volatile than Perth, if you look at it on a 30-year beta perspective. But Melbourne is not like that. Melbourne rarely has a huge kind of like 20% growth year, 30% growth year, nor does it then fall 20%, 30%, or even close to that. Rather, the booms are more shallow and elongated, maybe 6, 7 years of 8 to 15% type of growth. And I think that's probably what we're likely to see over the next decade. It has underperformed in the last 10 years because since 2017, it's kind of been quite lackluster. So I think the affordable areas right now are probably, you could use the word booming in Melbourne, but not all of them. I think I'm al always getting mixed messages around the western suburbs. Depends who you talk to. Sometimes they're like, "Oh yeah, Melton or Tarni, it's like it's starting to go up." And then you talk to another person and they're like, I'm trying to sell my property there and it's been 2 months and it's not selling." So I don't know what's going on there, you know what I mean? But I put it down to higher risk investing. And to your point, Rahul, before, I did a video on Darwin as well. I said it's a high risk, high return market. Yes, you can buy there 6 months ago, a year ago now, and make 20, 30, 40, 50% in the next 1 or 2 or 3 years. But equally, because we know that most of that demand right now, in fact, almost 50% of lending for Darwin is from investors, that bubble could also pop, that the air could go out of that if these big buyers agencies stop buying. So that way it's high risk. But then the question becomes, and this is more of a philosophical question, with there being like 5,000, 6,000 buyers agents in Australia. It seems like a new buyers agent every day. Is that a risk anymore? Because the big buyers agencies go in, and then the smaller buyers agencies who are just riding on the coattails of these big buyers agencies, like hyenas after a lion, then they'll go in to buy there. And then, the everyday investor who's following content on YouTube, on Facebook, they'll go in to buy there. And so it's like a self-fulfilling prophecy. And even though it was a terrible market, it's gone up, like it'll go up like 100%, and then it might go down 20%. It's just so hard to tell. So that my view is, okay, if you have a high risk appetite, go for it. You could probably make a lot of money, just like bull divers. But if you want to follow long-term, just fundamentals, assuming that COVID environment where you had builder bankruptcies, supply chain bottlenecks. Basically, the approvals were getting approved, but construction wasn't getting out of the ground. These kind of unique in circumstances, if you don't get that again, then it comes back to fundamentals. Stick to the fundamentals and you can get high return with low risk. I mean, that's kind of the way that I'd summarize it. Um, I mean, I'm being honest, like I do not know what will happen to Darwin. Over the long term, everything basically does well over the 30, 40-year period, but I do not know whether it will have a 30% correction after this boom, a 20% correction, or a 10% correction. If you already have bought there, maybe that doesn't even matter anymore because you're going to double your money anyway.
Spot on
A fair
again.
point. No, yeah. I was agreed to that, as you mentioned, in today's market, like everything is doing well. Everyone who's buying even house and land packages, whatever, like everyone is making money because the market is going up. So whoever they buy through, they look like a genius. And then down the line, as you mentioned, those, on the, on the toes of the big bias agents, the smaller ones and the newer ones also follow those steps, and they also get their clients. And they also make money, not much as the people who bought before them, but less than them, but they're still making money, and that's all they can see, that yeah, I went through this person, I made money on this property, so he must be right. But they don't see that the opportunity cost involved, that if they bought into some other location XYZ, which is like, fundamentally correct, as you mentioned, like
And I
actually, like
think,
in the long term, it's gonna sustain, the growth is gonna sustain, and they are gonna keep making money. And there's less risk of the property just stabilizing or even going down the line. So yeah, just wanted to agree to that, to
and
your point on that.
and the biggest miss, PK, through data is you mentioned a very good point, which was the most common point I used to hear between 2014 and 17 from some sophisticated investors, that go to the streets, look at what type of cars are parked there, look at whether the lawns are maintained or not. And I believe with data that a sense is missed at times. People don't go there, people don't drive around. And to your point, I don't want to start on things on Baldevis, but I actually drove around there. I knew there were 7 schools in vicinity. There were parks, not outside of the highway, to the east of the highway, and to south where there was no supply at all. Same comes Melbourne. I've been driving around the areas, the Western markets, Tani, Wyndhamville, all these pockets, they only went up in 2017 and then stagnated. The outer west pocket towards Geelong, even around Avalon, they've been my favorite markets. Properties have gone up 110% and then come down 15%. It's the same between 2018 and 2020. The Bellarine and Mornington Peninsulas went up. 2021 to 2023, Mitchell and Macedon Shires kept going up. I have bought a property at 735 in 2020. Between 2020 and 2024, it is still worth around 980. I've just gone ahead with about 8 investors, done a deal with a small developer, got lots, and once we build on it, that's $100,000 on 800K spent. So the idea is markets move by another 10, 12%, everyone will walk away with 200K gross profit, will come out. So I think it's knowing the market sometimes in a more intense way. There's another area, PK. I think I don't know if I ran past you, and you passed my commercial deal in Plainland in Queensland. In that single pocket in last 3 to 5 years, there's been an Aldi, Bunnings. Woolworths, Coles has bought space. Snap Fitness started with 1,200 subscriptions, and there's more fitness companies trying to just jump in, and just there's a good 350, 400 jobs created in that vicinity. And while the markets were going up and there was a bit lower social economic demographic, but with so many jobs, people tend to move there. Again, my point is there's just so many avenues, and
Yeah.
sometimes you can't even put it on your fingertips. And
No, I
yes,
completely agree. I think this is the value actually, Ashish, of like you say, this micro inspection rather than talking about Geelong or this area or that area. It's within Geelong there. If someone asks me how will Geelong go, I'll say, well, Geelong typically, if you look at 30 years of data, it really only does well after Melbourne has boomed. Okay, and that's like a generic comment. But if then whether you use a professional or you do it yourself, if you're actually passionate about it, you go in and you can see, okay, well, there's this little enclave here where there's value. And I think there is something to be said about that. And I don't think, please disagree with me if you wish, I don't think that a big buyer's agent will bring you that value because you found those deal 8 blocks or something like that, Ashish. For a big buyer's agent who's spending $200,000 on ads a week, they're not interested in that because they got to get 40 deals done every month to just pay the payroll, pay the staff. So they're going to be looking at markets on mass and ignoring these smaller niche opportunities that you're talking about.
look, could be. I reckon people who are passionate will make sure that due diligence and things are done right by whoever they're serving. PK, on the same point, and we've done building and pest. And Rahul, sorry, just digressing a little bit from the questions. PK, I know you've done those $3 to $5 million purchases as well. And while I'm ramping up a little bit towards commercial side, I do those $2.5 to $5 million purchases, and it's a very similar concept. Either you have a machine churning clients, or you have a smaller company who can't even or they lack the knowledge of that $3 to $5 million markets. It's a different type of inspections you're working with, different type of professionals you're working with. You can't just rely on a simple building and test, but you have to go with a structural inspection because especially when you're buying those big precincts. How have you seen that differ to just a normal 500-600K purchase?
Are you talking about like a $3 to $5 million commercial property?
Even resi, right? So you just mentioned you've got three roofers. Someone buying 500K property may not call three roofers. And I think this comes to when you're buying $2.5 to $3 million plus residential assets. And I believe sometimes that mindset is not there because most people are looking at these smaller markets. I can't tell you how many people come to me and they say, so they, like we've been told no one will serve us because we are owner occupiers looking at $2.5 million purchases. So on that front, both resi and commercial, if you can just add some thoughts there, how would you see the markets different? Buying a 500,000 purchase versus 2.5 million purchase, would you say there has to be a mindset difference and the professionals that you're involving in those purchases?
It's a good question. Let me have a think about it. I mean, genuinely, to maybe I don't want to say this in a braggadocious way. I'm just genuinely sharing my thoughts. Probably for like you or maybe me, a $3 to $5 million purchase is the same for a new investor, a $500,000 to $600,000 purchase. So the way that I'm going to approach answering this question is that, every dollar is worth something. That's what I try to teach my son. Like every dollar has to be earned. It's easy to spend money, but no one's just going to give you a dollar or 50 cents or so for a brand new investor, let's say they're in their late 20s or 30s, they've worked hard, maybe they've migrated from India or somewhere in the subcontinent or elsewhere. They've migrated it so hard to come start a life from scratch. They know most of them have come with hundreds of dollars or less than $10,000 at least. Every dollar has value. So for me, my advice and my mindset would be a $500,000 purchase for them and for me back in the day. should have the same level of due diligence as a 3 to 5 or $11 million purchase like this home right now. Do you know what I mean? So if I'm starting my property investment and I have a suspicion there's something wrong with the roof, I am not going to go unconditional until I'm fully satisfied that that roof is not going to cost me tens of thousands of dollars in the future. Because the relative importance of that to a new starter is probably the same as what a $11 million purchase is to me now. Do you know what I mean?
Well said. I couldn't
Spot
resonate
on.
more
Well
with
said.
anything else. Like every dollar, every cent has a value, and especially coming from India and the upbringing we have, the kind of mindset that we have, every single cent matters. And I just can't agree more with that, that you can't go unconditional on a 300, 500, 600,000 property, let alone a 3 million purchase without making sure that everything is as per what you want and you know exactly the dollar value it's going to cost you if you agree to this. So, like, yeah, I'm pretty sure the audience and the people who later down the line watch it can get this lesson from you. And they also get the same worth of, like, every dollar that they are spending. And I would love to hear that. So, thanks for saying that. So, yeah, there was one more question, I think, which is on the same lines of invest commercial properties. Sorry, Ashish, I'm just going to take this question first. It says, at what stage of property investing should we get into commercial properties? So, what are your thoughts on that, PK?
Um, this is probably an area but where Ashish and I are going to disagree, but I want to learn from Ashish, so probably let him answer this question as well. My thoughts have also evolved. I am a commercial property owner, and but I'm probably not as experienced in terms of buy and hold commercial real estate, probably as Ashish right now. So maybe he's the subject matter expert on this. But from my perspective, I bought into my buy and hold. So I've done developments in the past, like, childcare centers, etc. But in terms of buy and hold, I bought all of mine at the start of COVID. And, the way that commercial real estate works, if you just want to be completely passive, buy and hold an established, piece of commercial real estate, it goes up in value when interest rates come down because the yields compress and the value of a commercial property is inversely proportional to its yield profile. Of course, rents rise, but rent rises don't really have that material impact on the value of your commercial property increasing. And so since 2022 start, when interest rates started rising, commercial real estate kind of actually dropped. And that's the truth. At a macro level, in retail and office and even in industrial in a lot of parts, the valuations actually dropped. And you saw that because now all of a sudden you could buy 7% yields where in 2021 you couldn't, right? So my thought process is, okay, well, in a long-term stable interest rate environment, I mean, realistically, how much can interest rates drop from here on in? Sure, they can go up then drop, so maybe that's a good time to buy when they're on their dropping cycle. But from this point, there's not so much rate cuts that we're envisioning. So really, it's a cash flow play. And if you're buying a buy and hold established commercial asset that is, let's say, 2 million, 3 million, 4 million, 5 million, the yield is probably going to be around 5 or 6%. And you can get a term deposit with CBA for like 4% something, 4 point something percent. So one school of thought is that 1% yield really worth all that extra headache, all that extra risk, and yeah, all that extra time? That's one school of thought. Now, commercial real estate under 2 million, I'm talking from experience, and not just my experience, but hundreds of other transactions that people have shared with me. Under $2 million, it can go really well, but it can also go really, really bad because you're basically dealing with mom and dad business owners. And when businesses go bust, it doesn't matter if you have a really rock solid watertight lease, they're not going to pay it. Because if the business doesn't have enough money, it's already being chased by other creditors. You're just another creditor, and you're going to be spending tens of thousands in legal fees trying to get back your rent, and it's probably going to take you 6 months to a year to do that. So it's probably not going to happen. And of course, I'm painting a really bleak picture. This doesn't happen all the time. But it does happen more often than you like to think, especially for investors and commercial that have just started in the last 5 years. All you guys have known is good times, COVID money still splashing around the economy. For those of us who reviewed commercial real estate from 2010 to 2020, it didn't really grow at all, at least not in general. But the caveat to everything that I'm saying is the same caveat to that exists in residential real estate, which means there are markets within markets. There are always opportunities to make money, like Ashish shared before around Baldivis or the Geelong area. If you understand local pockets, maybe you can get land at a discount, buying it at a wholesale, and then you're building and you're adding value. Or even if it's established, there's always exceptions to these laws. I'm not saying you're going to get a 10% yield or a 8% yield off the bat, but there are a few great deals that are always available. And I think once again, it comes down to finding people that can find those deals for you or finding them yourself. Now, the only trouble I have with that is in Australia, there's like 10 million residential homes. And every year, I think around 500,000 properties get sold, like transacted. In commercial, it's like less than a fifth of that. And so there's really few and far between in terms of good deals to come. Though everything that I said, these are the realities. I think if you're a high net worth individual, you can consider commercial and it can work out really well for you. But if you're following the kind of mainstream buyer's agent content that a lot of unsuspecting, um, like
Everyday
financial
news.
freedom
Yeah.
aspiring people uh, do, then you're probably going to end up with a suboptimal commercial asset and you probably will regret it and wished you started in residential.
Okay, Ashish, do you agree with that, or do you have content?
Look, I don't want to drag the conversation. I somewhat agree with that. PK, my point is you should not be looking at commercial if you don't have the cash flow or risk appetite or experience with a little bit of investing. I believe when you're starting walking, that's what residential is, and then eventually you'll start to run or walk fast, and that's where the commercial comes in. So to your point, and look, indirectly, I have learned from you in one way or the other, not just the course, but also thinking why PK is developing a commercial asset. I'm sure there must be something to it. So that started me researching around. So I put investors in three stages: the equity generation, the cash flow to either compensate to the negative, and eventually buy and hold to make sure you're getting better yields. And commercial in suburban precincts has actually grown pretty well. Office spaces in Norwest have tripled in value in last 10 years. Would they grow at a similar pace? Absolutely not. Then comes the third stage, which is cash generation. Now you've got enough where you feel if you want to retire, let's say a humble sort of amount, you can. But it is a 15, 20-year journey. Like 7, 10 years will give you so you can see the results, but it's not gonna cut it off, depending upon what you're buying, where you're buying. And that comes the cash generation, where if in a business you start to work through how can you grow the business, acquisitions here and there, or start maybe to take some extra risks and understand a bit more. So things like land subdivisions, things like commercial developments, there's a good 30-40% returns that you can make. To your point, PK, the yields have actually dropped in commercial. So commercial market to residential market, I believe, is 1.7 trillion in commercial, and I reckon it's 9 trillion residential or total market. So
11
um,
trillion.
11 now. All right. So my stats are running a little bit behind, but the commercial market is very small. And the ticket size goes up, which is not everyone's risk appetite. The deposits go up, the rates go up. And yes, as you mentioned, I believe that $2 to $5 million range is the Goldilocks zone where you've gone past the competition of mom and dad investors. Um, and you've also gone past small business circle, and now you're trying to find national tenants, which comparatively would be more stable. One of the checks that I do is going and checking through ABNs of the business owners, and I bought a good property for on a 6% yield in Melbourne. This was around 2 years back. And after we bought, the guy actually sold the business. He used to own six ice cream shops, and this was one of the shops which was running for last 3 years. Very stable, right? So he did all the checks, and then he sold this part of the business. And the new guy came, he started creating issues. Luckily, we deep dived further and saw that the guy has actually listed the business back for sale in 6 months, and then he's subleased half of the shop. 80 square meters, he's done 40 each. So, and anyway, so but to your point, I fully agree. I think the risk appetite goes up. Again, what pays is, or what pays a professional, or what you pay for to a professional is understanding that risk appetite and guiding. A lot of people say, is it the right thing for us? And I said, if you can't keep up to the cash flow, if you don't have the risk appetite, just leave it. Please stick to residential. Don't even look at that because I confuse people as well. So, all right.
No,
Um,
you're totally. I just want to say as well to
yeah,
confirm your point, Norwest Business Park, that whole area, there's like a Woolworths there and like I'm trying to remember, next to
Virgin
the
Active Gym, Regis.
There are
yeah, but
banks.
also like the Woolworths head office, I think,
Yeah,
around
head
that
office.
area. That
Mhm.
area, commercial real estate has performed better than any real estate residentially, like over the last 15 years. So the whole point is finding those types of pockets, right? But they're few and far between, and yeah, let's see.
Awesome. Rahul, over to you.
Yeah. So the next question that is, what made you get into property and not into any other asset class? Are you into any other asset classes, or is property the main one?
Property is the main one. I used to be an investment banker, so I was very au fait with stocks and ETFs, etc. And I know that probably a lot of your audience loves stock market. I think it's like a national pastime in India, like property is here. Um, and
Yeah.
there's really no right or wrong, but the only thing is I didn't have the risk appetite to leverage at 80% and buy $500,000 worth of stocks. If someone
Yes.
can do that, then they can, at least talking about the ASX, they can do just as well as in property. But most people don't do that. Most people put like 10, 20, 50, max 100. No one's achieving financial freedom by investing $100,000 in stocks, not least in the ASX. You probably have to be very good stock picker and buy the right types of stocks on the NASDAQ or at least the Dow to do that. So I have no bias between this or the other. I understand both of them. But property for me was better and easier and safer for a very ordinary kind of not so intelligent person like myself. I do also invest in different things like private equity and other businesses and stuff like that. But in terms of a pure investment vehicle,
So it's because of the
it's
leverage,
just real estate.
leverage, the power of leverage that you can put 10, 20% and get a much bigger asset on that. Like
Yeah.
that's what is the driving factor for you to go
Look, after achieving financial freedom, what does your day look like?
Good
managing smart
question.
speakers.
Yeah. One thing is like yeah, just for everyone, just for context, anything can happen. And so I think having the right perspective on life allows us not just to be less stressed or anything. I think those are valuable but surface level outcomes. It allows you to of course be grateful, but it allows you to focus on what's really important in life. And I don't want to get into a theistic monologue or anything like this. It's different things are valuable for different people, but at least for me, my faith is the number one thing, and it allows me to come back to my faith and invest in it more and more and more.
Well
No,
said.
fair point. I also do try to do 10 minutes every day early in the morning, and I attended art of living classes, and I got the same mantra sort of things, and try to incorporate it into my life to reduce my stress level, which I'm sure it's not going to be as high as yours, but that definitely helps in achieving some sort of balance in that. Moving on to the next question, which is um so yeah, this is about your course and the the question basically is how many students have bought the course so far, if you want to get into that, and how many out of them have purchased the properties,
Yeah, sure.
if
So
you want.
there's over 1,200 students. Last that I know of, at least, is that there's just over 3,500 properties bought. The way it works is, I'm not a buyer's agent, so I don't have an exact tally of who's bought what, when. For example, let's say Ashish is a client or a student. I don't know how many properties you have, Ashish, and when you bought them and how much you bought, unless you tell me, right? Unless you email me every single time, which many clients do and others don't. Some clients will just email me after their first two or three properties and then I'll never hear from them again. So the business model is different, but at least the properties that I do know about, it's roughly between 3,500 to 4,000. I don't have like a database with all the addresses or anything like that, but I know where they bought and when they bought based on when they've told me or emailed me. So yeah, I mean that's kind of the numbers at a high level.
Okay, that answers this question.
That's some really amazing numbers. Now, jumping on to SMSF, and again, with disclaimers, it's not financial advice, financial planners. These days, I get a lot of inquiries to buy properties through SMSF, but I don't jump into shares or anything. Of course, I know my comparison, my reasons, but from your perspective, PK, for SMSF, should we buy shares in stocks or property?
I'm not the one to ask these questions from because I don't have a very successful SMSF portfolio. I mostly used my SMSF to make speculatory investments into altcoins and cryptocurrency, stuff that I'm really not an expert on. I do have real estate in there, but it's probably worth the same as an overall SMSF balance as what it was 10 years ago. It's kind of like my mock money because personally, my view on superannuation is it's probably going to get taxed more in the future than what they tell us right now, and it's just a bonus. That's just the way I see it. A whole bunch of clients have bought through SMSF, like you said, Ashish. I think is becoming more and more popular. And I mean, generally speaking, I think well, there's two schools of thought. I am of the opinion that diversification is always a good thing, inside or outside a SMSF. However, there's also a literary spiel, there's different books being written, and I also subscribe to it, that if you're very good at one thing and you know that thing better than almost anyone else, then diversification actually reduces your return on investment. And you rather just go full into that one thing because your level of risk isn't rising, but your level of return is. For example, for me, building and buying a commercial asset in a place like Geelong may be high risk. And alongside that might be high returns. But for someone like Ashish, because he knows more about that subject matter than me, for him it might not be high risk because he's already mitigated all those risk factors based on all his intellect and knowledge and experience. It might be low risk and high return. So you see, the same asset class wouldn't work for me as well as it works for him. And so for him, maybe it's a good idea to double down and just do that as opposed to stocks, ETFs, crypto, private equity, this, that, the other. Whereas for me, it might be better to diversify. So that's what I've done personally. I'm very good at property. I can say that, you know. So I basically just do property.
Yep.
Of course, there's private equity and developments and stuff, but mostly just property. But if you're not very good at property, if you don't have a passion to learn, and you're not very knowledgeable about it, then you got to mitigate your downside risk, and that comes from diversification.
And that's a very, very well said point, PK. I remember a conversation. Someone came to me and said, Ashish, I make 30% in stocks year after year, sometimes even more. And he actually knew his stuff around stocks. And he said, why should I be investing in property? And I said, there's no reason. Like, why do you want to invest? He said, because everyone's investing. And I said, look, even in property, the cash on cash returns fairly are going to work in a very similar way. But if you are constantly making 30%, I think you're doing really well. My understanding. Just keep
And a
doing it
fair
unless
point
you
to,
have, yeah.
no, I'm just saying that a fair point to what PK said, that, we know what's going to be taxed in future, because right now there are talks about a cap of $3 million, and it's not even indexed. The 3 million is just the cap as of today, and it may change in future. There are like talks happening that the cap of whatever the tax-free threshold is going to be 3 million. So if it's nowadays, 3 million seems a lot, but in the future, when 20, 30 years down the line, when people actually retire, 3 million may not be that much, when you take into account, it may not be a lot of money back and that time. And if you're being taxed at that, what's the point of putting more into your super? So yeah, again, again, not finance advice or anything, but just one more point to consider when you get and diversifying or not, individual choice as PK said. But yeah, the next question would be personal question for this client who said that I'll be moving back to India in 1 year. Is it worth purchasing IPs for me?
So I think one consideration is that if you're not an Australian tax resident, then every year you live overseas, the capital gains discount is eliminated on a pro rata basis. So you don't get the same pro capital gains tax discount, that 50% discount, as and when you sell the property if you're overseas, to the extent you've lived overseas versus you were in Australian domiciled residency when during the tenure of holding that property. That's one thing. If you ever want to sell, then it might not make sense. There's also tax considerations. I don't know what the tax relationship is between India and Australia. I know, Dubai has it different, the UK has it different um, with the USA. There's a treaty between Australia and the USA where you don't get double taxed at the federal level, but you do get double taxed at the state level. So for my investment properties, let's say I earn, just talk residential. Let's say I earn, I don't know what it is, $200,000 of net income from just the residential, excluding the commercials and stuff. $200,000 residential, so I have to pay income tax in Australia. There's no federal tax here in the States because there's no double taxation, but then in California, there's also tax. And in California, the highest tax rate, which everyone loves, is 69%.
Wow.
If I have multiple
Nice.
businesses, which I do, and if you earn over X amount, people can figure it out, whatever that threshold is. I think it's $600,000 or something. You pay 69%. So I don't know what the deal is in India, but there are these tax considerations that you have to get an accountant that knows both jurisdictions to help you through. Then the additional complication is the entity or structure you buy it under. For example, in the US, if you had bought a property in a trust structure in Australia, then even at a federal level, I would be taxed. So I'd be taxed at a California level, US federal level, and then Australia as well, because they don't recognize trusts. So, there's all these complications. I don't know how it is in India, but the tax implications are not nothing. But assuming that's all good and buying an SMSF, coming back to your earlier point, and not living in Australia and having an SMSF doesn't really gel that well together. There's various reasons. I'm not an accountant. You should get proper advice from someone who knows what they're doing. But let me just say they don't gel well together. So
Yep.
that's another thing. But I know that I have some clients as well. Like, I don't know how many clients, probably a few dozen, that have just bought a couple of properties in Australia whilst they've been here, IT jobs or whatever. They've moved back to India and they've said that they wanted to buy these properties because then they can retire more comfortably in India when they're ready to retire. I don't know how true that is because these days seems like India is more expensive than Australia in many respects. But at
True
least that
that.
was the idea. I remember back in the day when we were little, we used to go to India and our parents would like buy electronics and clothes. And it was real Nike, real Adidas, not fake stuff, but it was like half price. Now it's more expensive than Australia, more
It
expensive than the
is.
US. So
Yeah.
anyway, go figure.
Back in hundreds of rupees and you can get original Nikes and stuff. But now, game has changed.
Yeah.
But yeah, Ashish, you can jump on to the next question. This answer. Where else would you get PK answering your questions about if you can buy property in here and just move back to India? Nowhere else. Thank you, PK, for doing this.
Yes.
Ashish.
And I think there's always some learning to do, especially with what you're saying and the level you are, and at the level you are, it's just different types of problems, but there are problems everywhere. So, all good. Now, um, PK, just this question brings me to actually 2 points. Number one, what are your thoughts on emergence of Indian population in Australia? I know I've got my understanding, but from your point of view, and how does it impact the real estate world in Australia?
Sure. I think it's a good question, and I know you sent me the questions ahead of time, but just for the audience, I want them to know I didn't like actually read those questions. So sorry about that, guys, because I
Okay.
think the best answers come like more just impromptu. This is a really like sensitive question, so the way I'm going to answer it is in a pure intellectual way. So with anything in life, there's pros and cons. All right. Australia is an economy with a declining natural birth rate. Well, I shouldn't say declining. It's about 100,000 net births every year. That's been pretty consistent, over the last 2 or 3 decades. For this country to grow, it needs more people than that. Now, the question is, do we want it to grow? Like, do we believe in that fundamental principle of capitalism where GDP growth is the end all or not? I mean, I'm not taking a position on that, but that's an open question. But let's assume that you do want the country to get richer and grow, technologically, financially, infrastructure wise, et cetera, et cetera. Assuming that, then immigration is necessary. Okay. Then the question becomes, if immigration is necessary, what type of immigration do we want? And I think it goes without saying that, well, the type of immigration that we want is filling the holes that we don't have in Australia. In terms of a technology sector, probably we're not as advanced as other countries. Once again, I think we were discussing before we hit record how I think Australia is one of the best countries in the world. And I'm very, very grateful for everything it's given me. But the reality is there are people leaving from Silicon Valley, starting startups in Australia and making a killing because Australia is about 3 to 5 years behind the AI curve compared to the US. So they're implementing things that are now already redundant in Silicon Valley, in Melbourne, and making a complete killing. So that's the state of affairs. So in terms of the immigration that we want strategic immigration that actually helps all Australians because it fosters innovation and it fosters technological growth. Now, at the moment, the type of immigration we're getting, I'm not close to it, but I think the feeling on the street is that there are some type good types of skills that are being imported into Australia, but there are also types of skills that we don't need. And it's those types of skills, when you import them en masse, we're talking 500,000, a year, that can create some social unrest. And it's not just Indians. There's other Indians, New Zealanders, and people from England, from the UK. These are the three biggest immigrant groups over the last 3 or 4 years. But what's happened is that the quantum of Indians that have come into Australia is basically same, or if not more, than the quantum of Italians and Greeks and Lebanese, etc., that have come into Australia in the last 50 years. So there's a complete shift in society from a social fabric perspective. And I think that's a reality. I'm not contemplating whether it's right or wrong, but that is a reality and that affects people. Immigration is also a very, very important and good thing. If we had not had it in the last 3 years, Australia would have been in a huge recession. Not my opinion. This is from the Reserve Bank of Australia itself. In fact, we narrowly missed a recession, and the RBA modeled that if we had not taken a number of international students and also temporary residents, permanent residents, that the economic stimulus that these people provided once they land would have meant that Australia went into a deep recession. Now, once again, I'm not arguing whether we should have had a recession or not, but we didn't. And it was because of immigration. Some people argue, well, we should have sucked it up, had the recession, and then come out of it leaner, fitter, meaner. I'm not debating whether that's right or wrong. I don't know enough about that. But I'm
Yeah.
a big advocate of immigration, the right type of immigration, and the right quantum of immigration, so that these poor people, when they come, they can actually find houses to live in. I think right now what's happening is that immigrants are being targeted somewhat But it's not even their fault. They thought they were coming into Australia and that they would be able to buy housing or rent housing at an affordable price. They didn't realize there was this housing shortage. So is it their fault or is it the policy's fault that allowed them to come in the first place? Right? I think this is a very nuanced point, but as a principle, and probably the last thing I'll say is only bring in the number of people that your infrastructure and housing can allow for. Okay, I think everyone agrees on that. And fundamentally, if your economy is going into a recession and going to be deflated because you can't bring enough immigrants in because you don't have enough housing, then solve that housing shortage rather than point the finger at the immigrant. That's my overall thought.
Yeah, it's a
Very well
catch-22
said.
situation. It's a really good answer. And then also just on the same lines as you mentioned, the skilled migration when they're giving their permanent residency, because I'm a migrant, I came here 6 years ago. And the process that I had to go through, I had got my permanent residency directly from India, and the process that there was, they send people. This is a very like lesser known fact, but they send people from embassy disguised as local people to inquire about my background, if I have any like criminal activities in my neighborhood, at my workplace, to make sure that I'm the right sort of person who is gonna fit in the like environment, and that's when they gave me the residency. So this is the kind of process they do have in place. But again, the catch-22 situation is that if they don't get more students, the temporary residents, which the process is more lenient, then again the economy can suffer from that, which nobody wants. In like it's easier to say that let we will get through that, we will come out stronger, but then why should you even go through that when there is an alternate way to do that? But as you mentioned, it has to be done in a balanced way where the skilled migrants are given a priority and not the quantum, as you mentioned, should not be the volume of the people coming in should also be balanced so that it doesn't change the whole fabric of the of what this place is essentially. No
I think
country would want
the migrants can make it easy on themselves as well by trying to integrate into Australia, and I know it's hard, and I think, it's human nature to go towards something that feels safe, familiar, same language, but I think you have to honor the country that you come into, and you can't just stay in your own pockets and point fingers.
Yeah, if roles were reversed, like if let's say that there are things that then people from different country came to, like let's say in India, and they were just doing how they like act in other countries, we would also have a little bit of a problem that hey, could you please also integrate a little bit and have a little bit respect and work towards that. And I think it's the same with humans. It's not a country thing. It's not. It's just a human behavior thing. You just want to be integrated and people to get along well and live peacefully. That's all everyone wants
Yeah,
in my
100%. I
in
think
my
99% of people are just fine on, whether they're born here or they immigrated here. I think the ABS stats show that more than 50% of Australian population was either born overseas or like second generation immigrants. So it's a land of immigrants, like let's be honest. I think 99% of people are just fine with that. So yeah, let's just focus on that 99 rather than
Yep.
letting 1% of people influence social or economic policy.
Yep. Yeah.
And the other
Ashish.
aspect is actually Indian population has doubled, almost doubled, in last decade or so. I think when I came, it was around that 1.7-ish person mark, and today it's about 3.2%. So again, from a growth perspective, it may still be about 3.2, 3.3% of Australian population, but it has actually doubled. And that's where a lot of influx, but PK, you spot on in saying we need to ensure we gel along well into the culture we've come into. Um, and yeah, just some points really well said, PK. I just can't. I'm excited and at the same time amazed on the quality of answers that you've been giving. And I'll keep on saying amazing, amazing, but I really feel the answers are
What
good.
what is the
Can
impact
I,
of that in the
Rahul,
real
can I
estate? Sorry,
ask a
yeah.
question to both of you? I didn't answer this one. I just remembered I didn't answer it, but I think you guys probably better placed. How do you think this influx of Indians is going to impact the property market? For example, are Indians more likely to invest and build portfolios compared to other types of immigrants or local Australians? Are they wealthy enough to do that? is property investing and the demand for it going to structurally increase because of the Indian diaspora? Um, like I have my view on it. I think yes, but you guys are involved and your community is closer than probably me, so you probably are a better place to answer.
Do you want to take that, or should I? I think answer
Okay.
would be similar for both of us, but yeah, you can go on.
Look, I believe there's a big mentality shift of savings and putting that savings into an asset that grows in value. So that mindset shift has actually led to tightening of houses or supply in certain areas. Taking example of Windermere, for example, there's so many people moving in. It's still affordable. Investors may shy away from it, but owner occupiers, there's no reason because it serves as a cheaper entry point. Um, and people are still buying house and land packages. I think you cannot stop 100% of the audience to move into such certain areas or whatever. But I felt sometimes the quality of the owner occupier market and the tenant market changes drastically because of that mentality that rent money is dead money. So in such areas, the renter population demographics actually drop, as opposed to an area where you'll find a mixed demographic where the mentality is focus on family, focus on dine outs, um, or eat outs rather than takeaways. And that's where the shops or quality, not quality, but the type of shops and commercial pockets change as well. But I believe that I don't know. I've been called a hoarder as well. I've just finished my 14th purchase and I've sold three as well. But I don't think it's the hoarding. I think it's hunger to achieve more. And when you are starting again from scratch, come into a different country, a different world, yes, you're trying to find a familiarity to where what you've left, trying to mingle into a new area, but at the same time, that hunger, that zeal, that aspiration actually increases because you're starting from scratch. You've come outside of your comfort zone. And that's what is leading people to buy more and more and save more and more. I see households earning 180 to 220, but they're saving a good 6,000, $7,000 a month. It was very hard to do otherwise. And with all of that savings, I believe the investments will keep increasing. And
Right.
yes, and that's where I see the shift going. Everyone wants to have a home, everyone wants to buy an investment property, and maybe it could be other diversification as well. But from a property standpoint, this is at least what I see.
And we haven't actually even seen that wave of demand from the Indian immigrants or any immigrants that have come in the last 3 to 4 years. I mean, they're still
Yes.
just settled. That wave will come in the next few years, probably, once they've now sort of grown a few roots. And I don't think it's just Indians. I think even if you take Australians that have moved abroad, it's normally, these are generalizations, not always true. It's normally the more aspirational people that have the willpower and courage to move to another country, and they're the ones who are striving more for success. And so the people who are coming to Australia from India, just like, let's say, Australians moving to the US or the UK or somewhere else, they're already of the Indian population. I don't want to say top 1%, that's probably not the right terminology, but at least from a hunger perspective, like right up there. And so naturally, they're not going to be satisfied with just buying an own home. A lot of them are going to want to be like, well, all these people are wealthier than me. I'm going to catch up to them and, I'll show them. So,
Which is
I
fair because,
think,
like,
yeah,
we can be classified whatever, like anyone who wants to classify anyone who is hungry, aspirational, ambitious as hoarder. Let the label be there, which we understand, but then they are doing it the right way, the fair way, by paying their taxes, by contributing towards the economy, by working towards, like, making the extra jobs, free jobs, working, making your way into a country where you may not even speak the language or be not that fluent in that, and then taking a grasp and then becoming a top contributor and then having that build that wealth which everyone has equal opportunity to, less for the person who has migrated here because they have a little more challenging. They don't know anyone, they don't have the contacts, they don't know, like, how this country works, and then working your way towards that. So that comes from a place of hunger and how much ambitious you have, and place of opportunity like Australia, where everyone's goal is to have a piece of land where they can build a fence around that and say that place, call that place a home. And even the PM with the press media can't step on that, and they can say, hey, I just receded that, can you step off? And that's the power of Australia, which Indians love, that we want to have that piece of land, and also have multiple pieces of land, because that's how it is ingrained in our mentality and the mindset that we have. So I think this is what um, makes us a little bit more towards achieve that.
Such a great point, Rahul. And I think, yeah, that confidence in safety and the regulation and the rule of law is such an important thing that I think immigrants take are more grateful for than perhaps people who aren't immigrants. When you travel around the world, you see that it's not always the case where you can buy something and it's guaranteed to be yours. Even in the US, like, yeah, there's laws here, but I have to pay like $90,000 in property tax every year just to keep my home. If one year I don't pay that to the local city, then they take my home away from me, even if I have no debt on it, like no mortgage. So things are so not, I don't want to say easy, but just so favorable in Australia. And I think personally, I think structurally the profile of demand has changed forever.
Yeah,
Oh,
I
good.
would.
Rahul, I think the rest of the questions that there's two left. It's
Yeah.
almost 2 hours. And we've talked about trusts. I don't know if you want to take away the rest of
Um,
the questions or
yeah, let me just cover the last one, which is and you can do the 14th one. I'll just do the 15th. So it just says that thought on moving my investment property under a trust to free up borrowing capacity. So before you PK answer that, let me just quickly cover that briefly. That we are doing just gonna do a session later down the line, yeah, about how to increase borrowing capacity in 2026. But yeah, in that this point will be covered as well. But yeah, PK, I would love to know your thoughts on this.
So
Have you ever?
transferring a property from a personal name into a trust, is that the question?
Yep. To free up the borrowing capacity, it's yeah, you would know.
Sure. I mean, transferring ownership structure comes with a lot of costs, main cost being stamp duty. And so that is something that might be cost prohibitive for people who want to go into a trust structure. It's not just $100, it's not just $1,000, it's tens of thousands of dollars in stamp duty to change it over. You would only really do that if you knew you had maxed out in your own name and you knew that you had a very robust strategy alongside a good accountant and mortgage broker to say, okay, if I cop this $30,000 in stamp duty, let's say, move this property over into a trust, then I can buy multiple more properties. It's not going to expand my borrowing capacity, but rather it's going to preserve my borrowing capacity in some cases when that trust basically pays for itself. Now, there's a lot of nuance in here, and I'm not an accountant. I can't give like proper advice. I have not deployed the strategy myself, so that that's a preface as well. You got to talk to someone who has actually done it. Of course, I've helped, innumerable people do it, but it's the accountant that has given them formal advice. Would I do it myself? Yes. If I was in a position where I was on a low income and in my own name, I could only buy a $400,000 property. But then let's assume that this strategy of buying in a trust preserved my borrowing capacity and I was able to buy three instead of just one, I would do it, right? Because three properties at 500,000 each doubling is more than one property at 500,000 doubling. So it's a short-term hit for a long-term windfall. So from that mindset, I would do it. But this strategy is not vanilla in the sense that it's not simple. There's a lot that can go wrong if you don't structure it correctly. Bank policies can change as well. And I know at the start of the session, Ashish, you mentioned probably a good idea to avoid trusts until you have some runs on the board. Obviously deductions, negative gearing against your own personal income isn't allowed in a trust. So there's lots of downsides. So you got to weigh all these things up.
Perfect. No, couldn't have answered better myself. But yeah, that's about it.
awesome. Look, it's the last question, PK. I'd love your 5-10 minutes after the call as well. I appreciate your time already, but I'll still ask. So, it says, Hi PK, I'm thinking to move out of buying an apartment in Gold Coast and make it an Airbnb. Is that a good idea?
So pros and cons. Airbnb will probably give you much higher yield. So you probably will get 10 to 14, maybe 15, maybe even more percent yield on an Airbnb. Compare it to standard residential, where if you buy well, you get 6 to 7%, or sorry, 5 to 7%. So that's one consideration. However, Airbnb policies can change. The government can crack down on them. Local city councils can outlaw them or tax them even higher than they already do. Victoria's already started doing that over the last few years. So that can erode that additional margin that you're making. Also, it's very hard for banks to give big LVRs or big debt on Airbnb strategy. And also, if you're buying an apartment in the Gold Coast, it probably will go up in value, but it will probably also underperform better locations where you get land, some sort of good, decent land to asset ratio, as opposed to just basically owning a pocket of air in the sky where the actual construction or the building it depreciates, loses value over time. So from a capital growth perspective, it's probably a suboptimal outcome. If it was a combination of a lifestyle move, you wanted a holiday home and then you wanted to make money on the side, probably makes sense. But as a pure and simple investment, I know people who've done really well with Airbnbs, but for every 10 people who do Airbnbs, probably only one or two of them do it for the long term because they're the ones who actually make money in a low headache, low risk, kind of hassle-free sort of way. So yes, it can be done. But for me, like we talked about before, I like to keep things simple. I like to keep my risk down and I like to get my return up. And so I would for myself, I'd probably not do it. If you're in that top 10, 20% of Airbnbers, you could probably make it work.
Amazing.
Great.
PK, we're done with the questions. I've got so
Yes.
many of my own, but either way, I respectfully just would like to close, knowing that you're busy as well.
And this
However,
concludes our session. But yeah, that concludes the session for today. Thanks a lot to PK for taking the time out for the community, for us, to answer the questions for us. And that's been really, really helpful. We can't be more grateful for all the wisdom and knowledge that you have provided us, PK. Thank you again for doing this.
And thank you,
yes.
both of you. Hopefully, I've added some value to your audience.